What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is GBPUSD. The structure here has changed, so it's definitely time to make an update and see where we can be looking for the next potential opportunities on it. Now, at the moment, actually, depending on where this market will provide the next impulse, there are two very good opportunities that this market could provide. So it's definitely time to make a full breakdown. So first, I will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And then by using the combination of our technical breakdown and our order flow breakdown, we will be able to understand where are the highest probabilities for some opportunities on GBPUSD. And as usual, I will be keeping the analysis as educational as possible. Now, starting here from the monthly time frame, what do we have now? Here in the monthly, we can see how the market at the moment is testing a very strong supply area. In fact, from here, the market started all this move to the downside, and currently we can see how we are testing again the same supply zone from which there is definitely the possibility to see the market creating a rejection to the downside. So here on the monthly, we're testing this very strong supply, and as we can clearly see, the market has already started rejecting it to the downside. In fact, we can see how we had created this high test of the supply, and the market just rejected this supply to the downside with the same exact monthly candle, as we can clearly see. Going down on the weekly time frame, what do we see now? Here on the weekly, we can see how this market has just provided a nice impulse, correction, and impulse pattern to the upside, creating this higher high and testing the supply that we have at this zone, as we have already identified from a monthly perspective. And the rejection that we see here printed is quite clear. Now, the last structure that the market has created here on the weekly time frame is exactly at this area. In fact, from here, the market had created this move to the downside, meaning that this is a strong resistance area, which, now that the market has broken it to the upside, is turned support, because as you know, in the market, previous resistance, once it is broken to the upside, is turned support. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just provided a quite sharp correction that has just broken and closed below the 0.32 of the Fibonacci taken on this weekly impulse. And there is definitely the possibility to see the market provide a deeper correction. So here on the weekly, everything looks quite bearish, and we definitely expect a deeper correction and rejection away from the monthly supply. Going down on the daily time frame, what do we see? Now, here on the daily, price action is quite clear. I had spoken about GBPUSD after the market had provided this massive move to the upside. When the market was here, I made a full breakdown explaining all the reasons for which, from this level, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. And by the way, I will link in the description this previous analysis so you can go and check it out for further reference and more free education. If you have any requests for other breakdowns, make sure that you leave it in the comment below, and also make sure you like and subscribe. Then, when the market was here, I explained all the reasons for which, if we would have shifted back to a bullish market, we could be looking for the continuation to the upside. However, nothing changed from a 4-hour perspective, so with students, we didn't even add GBPUSD to our watch list. And at the moment, we can see how now the market is changing again structure, which leads to the reason for which I made this video in the first place, to show you guys where we can be looking for the next potential opportunities on GBPUSD. Now, one very important thing to notice is that this area is strong support, okay? This is previous resistance, now turned support here, and again supported this area. And now, if this candle here in 11 hours and 52 minutes will actually close red, that would be great, because no matter if after this red candle will create a move to the upside or to the downside, the market will provide In both cases, some quite interesting opportunities, which I will now show you. But let's first go and see what we have from a COT perspective, which is the commitment of traders, which is what hedge funds are currently doing in the market. Now, here on the pound, what we can see is that with the last report, hedge funds have added 7.9k long positions and closed 800 shorts. Now, all currencies on the spot are traded against the USD. So if you're checking the data for the GBP, what you are actually checking is GBPUSD. And what we can see is that with the last report, net positions have increased from 22.1k to 30.9k. So we see a strong increase of the net positioning. So overall, the pound is starting to get quite strong, and there is definitely the possibility to see GBPUSD create a strong rejection to the upside. Is definitely a possibility, considering that during this move to the downside, they are adding longs. So we could definitely see a deeper rejection. However, if we look at overall what has been going on, we can see how hedge funds increased their net positions all the way to here, then they decreased, and now again they started increasing. However, if we look at the short positions overall, shorts had already been closing for 3 reports in a row, which means that overall the shorts getting closed had already started from here. Meaning that at this point, what could easily happen is that the market also breaks lower to grab some liquidity here for more adding of longs, because keep in mind that a lot of stop losses are placed below these lows. So how we can be looking for the next opportunities? Now, as usual, trading is reactive and not predictive. This is a decision area. We don't know if from here the market will create this move or this move, but in both cases, there are some good opportunities that the market will provide. In fact, if from here we will see the market create a move to the upside after printing this red candle, then in that case, what we will have is a creation of a W formation. Now, generally speaking, after a W formation, you want to see the market create a move to the downside to go and complete the pattern back down at the previous resistance, now turn support. So if the market from here will create this move to the upside, at that point, we will have this W formation. And inside of this area, what we will be doing with students during the move to the upside is monitoring price action from a 4-hour perspective, waiting for the market to shift from a bullish market to a bearish market. Now, why we will be waiting for confirmations on the 4 hours? Because monthly, weekly, and daily, those are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So with students during this move to the upside, we will be waiting for the market to shift from a 4-hour bullish to a 4-hour bearish market. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probability at that point for the move to the downside and for the market to complete the pattern back down at the previous resistance, now turn support. On the other side, if the market will actually manage to break below the support, at that point what we will have is the creation of an overextended M formation. And after an overextended M formation, you expect the market to provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. So if the market from here will create this move to the downside, again, during this move to the downside, we will be monitoring price action from a 4-hour perspective with students waiting for the market to shift from a 4-hour bearish market, as we will have, to a 4-hour bullish market. And as soon as the market will shift from a bearish to a bullish market, we will be adding GBPUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probability at that point for the move to the upside and for the market to complete the pattern at the previous support, now turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates. For all of you, you can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.